Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, big moves out of the White House this week, from trade talks to President Trump's latest budget proposal calling for a surge in defense spending. We'll tell you which stocks are poised to rocket higher and which ones could tank. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Teresa Rivas, and Andrew Berry. So, Ben, there were a lot of tariff headlines this week, but the S&P ended up ending the week only a hair below where it started.
Yeah, I mean, this is the kind of week where, given the news flow, you would have thought it was be a fantastic week for the market. We got a trade deal with the UK. There are all these questions about whether the U.S. and China were actually talking to each other. Well, they're going to in Switzerland this weekend. But the market, S&P 500, finished down half a percentage point. It seemed like it should have been everything the market wanted, but it just couldn't get the market moving.
Well, the UK we left 10% tariffs in place, right. And we actually have a trade surplus with the UK. So to me, this suggests this could be a long slog in negotiations.
That's right. And then we have all these other countries that might take a harder line. And we also got a comment from President Trump that, 140% tariffs on China is too high, he said. But he thought maybe it should be more like 80%, which still would not be good.
Yeah. Andrew, what were you looking at this week?
I was looking at Berkshire Hathaway. I was out at the meeting with this past weekend, and the stock was down this past week, underperforming the market on news that Warren Buffett's going to step down at the end of the year. I tell you, I mean, the people are wondering, is the stock cheap now? I wouldn't chase it here. It's still about 20 percentage points ahead of the stock market this year.
Yeah, it crushed the S&P this year. So meanwhile, Ben, Jerome Powell would prefer that the Federal Reserve not be part of the conversation. He's kind of succeeding in that.
Yeah, I mean, this week there was a Fed meeting, and it really didn't move the needle much. I mean, Powell doesn't want to do anything, and he has a point. There's still no sign yet that the economy is weakening because of the tariff activity, and there's no sign of inflation, but they could go either way, and so he just wants to wait. He knows his history. He doesn't want to repeat of the 70s. That isn't making the president happy. The president looks and he sees the Bank of England cutting, the People's Bank of China cutting, the ECB has cut. But for right now, I mean, Powell is, I think, right to stick to his guns and just say we don't need to do anything yet.
So you said he hasn't seen inflation yet. That's probably because, I mean, the tariffs have only just been implemented. It'll take a while for that to get to the hard data, and you will get some hard data next week. Probably still too early?
It's probably still too early. We're going to get CPI, the Consumer Price Index, the Producer Price Index. We're also going to get the Michigan Sentiment Survey, which has inflation expectations in there. I don't expect it to show anything yet. The other place I will be watching will be Walmart's earnings, because the other side of it is the consumer. How are they holding up? And I think Walmart, it's not going to be their earnings themselves, but what they say about the current quarter and the guidance they give that's really going to matter.
Let's also talk about Alphabet. Andrew, that is the cheapest stock in the Mag 7 now by far.
Yeah, it is. It's traded for only about 16 times this year's earnings, about half the valuation now of Apple. People concerned about its dominance in search, which is one of the great businesses on the planet, and whether or not it can hold its own as AI-driven search engines like ChatGPT challenge it. There's a big debate now on Wall Street about it. The stock was down about 6% this past week. It's underperforming the market this year, down about 20%. The bears say that there are, quote, seismic changes happening right now, and it may be a loser. Barron's did a bullish cover story on Alphabet this past year, and we did a upbeat follow-up this past week. We think it can survive and also thrive in search. Plus, there's some other valuable businesses inside Alphabet, Waymo, cloud business, and YouTube. And I think the bullish analyst at Evercore said, the concerns about this are greatly exaggerated.
The CEO of the board, they don't want to see a breakup from this antitrust action. But you mentioned Waymo, you mentioned YouTube, which is bigger than Netflix by a lot of measures. I would think that for investors, if it stays the same, it's a good company. If they break it up, it might be even better.
Yeah, I think either scenario could be a good one. And right now, you're basically not paying a lot for what is one of the better, tech conglomerates in the world right now.
Absolutely. Teresa, Biotech had a bad week after a bad 5 years. They can't catch a break. What's going on?
That's true. So this week, the FDA named Dr. Vinay Prasad to be their new top vaccine regulator, and he's a very vocal critic of vaccines. He replaces Dr. Peter Marks, who was forced out of the organization, and he wrote a scathing rebuke to RFK Jr. and his supporters. And for his part, Dr. Prasad says that he's more critical of drug companies, and that's what really hurt the stocks because people aren't expecting expecting him to usher in an era of many speedy new approvals, be it vaccines or medications. So we saw lots of big names like Pfizer, Moderna, Gilead fall.
We got to go out of that, but for investors who think they might have gotten cheap enough, there's IBB on the index side, and then the Janus Life Sciences Fund is pretty strong as well.
Yes.
All righty, thanks, Teresa.